Hey guys, welcome back to Stacking Stocks, and thanks for joining us today. We're going to be doing a deep dive into some research from Holland Global Investments that suggests that Tesla is well on its way to becoming a $10+ trillion company, and that Tesla stock today is worth $3,369 per share. Tesla stock is currently valued at an estimate of $1,096 per share. That means that Tesla stock, by Holland's calculations, is more than $2,200 undervalued. Right now, in other words, Tesla stock should be 3 times its current price today. So what's it going to be? Sit tight, hold your breath, and stay tuned. Clearly, this research is worth discussing. There's one controversial assumption in this research, but the truth is the more that we look into it and the reasoning behind it, the more we get on board. With that said, let's get into the video. Veteran electric car stock investors have spent years with limited options. Sure, there have been raw material plays like lithium or copper companies, but in terms of automakers, viable investments have been few and far between. That is until companies like Lucid Group, Rivian Automotive, and NIO hit the scene. Plus, there are several legacy automakers like Ford that are serious about diversifying toward electric vehicles. This sudden surge of options can be overwhelming. One choice could be investing in the kingpin itself, Tesla, or exposing yourself to high-risk, high-reward growth with a 50-50 split of both Lucid and Rivian. Tesla has found itself on the chopping block due to fears that CEO Elon Musk's optimism is wavering. Musk has stated his intention to sell some of his Tesla stock, which, to be fair, is usually a negative sign. But that isn't the focus of today's video. Let's talk about the $3,000 price tag. Tesla on the Road to a $10 trillion company and beyond by Tim Davies. We thought it was worth reading just a few of the sections from the executive summary. We think they're a great overview of why Tesla is absolutely slaying the industry and about their future dominance. Regulation in developing countries will be driving annual EV sales to 206 million by 2050. There was a controversial assumption in this report. Tesla's first-mover advantage over competitors will allow it to capture 25% of EV sales in the next decade. Tesla's major manufacturing advantage over traditional ICE and new EV brands deliver higher profit margins and massive cash reserves to underpin ongoing innovation. A fully integrated energy production and storage solution gives Tesla an edge over its competitors. Tesla's lower lithium battery costs slash EV operating expense, and Tesla's main competitors are drowning in debt while it remains one of the most shorted stocks today. The bell curve is real. Tesla's share price has defied the critics and buried short sellers, delivering a 720% return in 2020. Holland Global Investments believes that at current prices, Tesla's shares have remarkable upside and provide investors with a once-in-a-generation buying opportunity. We really believe that Tesla is a once-in-a-generation investment opportunity. Based on Holland's analysis of Tesla's 30-year discounted cash flow forecast, we value the company today at $3,369 per share. Tesla can achieve our long-term financial forecasts. Our DCF valuation for Tesla in 2030 increases to $6,244 and further increases to $9,056. In 2040, regulation and developing countries will drive annual EV sales to 206 million by 2050. We're now getting to the most controversial point, an assumption in the entire report. This is critical to their valuation. According to our 30-year global demand model, the company will benefit from a doubling of global passenger vehicle sales to 206 million vehicles by the year 2050. We expect governments globally to ban ICE vehicle sales by 2040, and the use of ICE cars will be banned across most of the globe by 2050. We personally believe these are very reasonable assumptions. Let me know in the comments if you agree or disagree, and give us a why. A key finding of our work is that 75% of global demand for EVs will come from developing markets over the next 30 years, with rising disposable incomes and a 40% increase in developing market populations. This is a very important point. It will allow over 1 billion people to own a vehicle for the first time. 40% of EVs sold over the next 30 years will be in India and China. The global vehicle market will effectively double on the back of the rising billions. Holland believes Tesla will produce almost 5.5 million vehicles by 2025 and capture over 20% of global passenger vehicle sales over the next 10 years. We always like to contrast these types of projections with our own just to see where we're at now. Now, this is going to sound very arrogant, but generally speaking, the closer they are to us, the more we think they know what they're talking about. We estimate Tesla to produce well in excess of 5 million electric vehicles in 2025. We're actually extremely close to one another with our production estimates for Tesla. Tesla's major manufacturing advantage over traditional ICE and new EV brands deliver higher profit margins and massive cash reserves to underpin ongoing innovation. The second point we just want to elaborate on here. Few investors understand the enormous difficulty involved in switching from manufacturing ICE vehicles to EVs. Tesla's lower lithium battery cost / EV operating expense. Tesla believes it can lower lithium battery costs by over 50% in the next 3 years. A shout out to Tesla's Battery Investor Day, where they unveil these plans, and the following is a very important point. Tesla's main competitors are drowning in debt. The leading global ICE automakers currently have over $900 billion of net debt on their balance sheets. Please take a moment to let that sink in to your financial and valuation forecasts. We forecast total vehicle production will reach 34.2 million electric vehicles per year in 2040. With its combined revenue from AV sales, software upgrades, vehicle services, and Tesla's energy division reaching $2 trillion by 2039 and $3 trillion by 2047. Holland also forecasted free cash flow will reach $500 billion per year in 2037, surpassing $1 trillion from 2047 onwards. This enormous accumulation of cash could be used by Tesla to develop new business opportunities beyond its current EV and energy plans. In full contrast, my valuation model for Tesla in the bull case makes these figures look like an absolute joke. But keep in mind, Holland is assuming software revenues, not including robotaxi. They also include automotive energy and nothing else. Our model actually implements robotaxi revenue as well as some Tesla bot sales and the ongoing subscription costs for those. The point here is that Holland, in our opinion, is actually very conservative. They're not even considering or including the biggest money printer in Tesla's future, robotaxi revenue. Tesla could also use these funds to pay dividends to its shareholders or initiate substantial share buyback programs. At some point in the future, it becomes inevitable, and Tesla will be forced to pay dividends because they simply won't be able to think of any conceivable use of all that money that they're printing. We've used a discounted cash flow approach on Tesla to reach our current share price valuation of $3,369. We want to underscore that it's a current share price, not the future. Tesla can achieve our financial forecasts of our DCF valuation increases in 2030 and 2040 to $6,244 per share and $9,056 per share, respectively. Holland's current DCF valuation target of $3,369 illustrates the substantial undervaluation of Tesla. And as a conclusion, we believe that Tesla should be a core holding in every investment portfolio, and we completely agree. Holland believes that the replacement of ICE vehicles with EVs globally, as well as related investment in renewable energy and infrastructure, EV charging networks, and energy storage solutions, is the largest investment opportunity globally over the next 20 to 30 years. Global EV sales will reach 86.4 million vehicles per year by 2035, with a surge to 206 million EVs in 2049. As we approach our 2050 deadline for the removal of almost all ICE vehicles globally, EV demand is set to explode over the next 2 decades as governments look to address greenhouse gas emissions. Developing markets will see significantly stronger GDP growth than developed markets, with the rising per capita wealth expected to lift car ownership from 10 to 30% by 2050. That's all for today. If you enjoyed the video, like, share, and subscribe. Stay safe and see you next time right here on Stacking Stocks.